Mutual funds, what are they? They are basically a managed fund that pulls money from shareholders to invest in securities. Now, typically, when you take a look at mutual fund, right, they have multiple types of investment within the portfolio, such as bonds, stocks, money markets. They tend to give you like a classification. How many percent of this is invested into local or foreign stocks? Let's say 60%. Then how many percent of it is invested into bonds? Maybe 20%. And the remaining 20% goes into money markets or other instruments. Now you can see unit trust fund over here. Actually, unit trust fund and mutual fund, they are slightly different, but people tend to use these terms interchangeably. So for tonight's purposes, to keep things simple, we will also use these terms interchangeably. But just know that the slight difference between a mutual fund and a unit trust fund is that unit trusts, your shares or your assets are held by a trustee, rather than you being the shareholder itself. But when it comes to exchange traded fund, this one is totally different compared to the first two things that I mentioned. Okay, because exchange traded fund, just like the name suggests, it is typically traded within an exchange, which means you can trade them just like a regular stock or a share. ETFs, they typically track a particular index. You may have heard of, the US stock market ETF, gold ETF. Mutual funds, they typically have higher fees because they are actively managed. Yeah, you have fund managers inside trying their best every year to make the most profit within their investments. And within mutual funds itself, their assets tend to change from time to time, especially if it's an aggressive mutual fund. That's why the fees is slightly higher. But in the case of exchange traded fund, right, like what I mentioned just now, since its job is just to track a particular index, such as the US stock market index, you can see these two tickers over here, VOO and VTI. These two are Vanguard exchange traded funds that track the US stock market. So their job is, I would say, simpler and easier. Therefore, the fees are much lower. They do not have things like initial sales fee, management fee, and trustee fee. The fees that you normally see within an exchange traded fund is just the ones that are charged by the exchange and probably a tiny bit from the fund itself. And also, I alluded to it just now, you can buy and sell instantly just like a regular stock from an exchange. But when it comes to mutual fund, it has to depend on your provider. Let's say Versa itself. I'm sure some of you have downloaded the Versa app or perhaps have the Touch and Go app, maybe explored Touch and Go Invest before. Each of these respective funds within these platforms, right? They are called mutual funds, okay, or unit trusts in particular. And you can see the example over here. This is a few examples of exchange traded funds. And the orange one is QQQ, blue is VTI, and yellow is VOO, and the candlesticks is the S&P 500 index. So at the end of the day, if you were to tell me and say that, hey, I want to invest in QQQ and I want to invest in VTI and VOO at the same time, well, it doesn't make any sense. It doesn't make a lot of sense because they track the same index and their performance are pretty much similar. What you got to take note of for exchange traded funds is which one has the lowest fees plus the best track record. But when it comes to mutual funds, you have to read the fund's prospectus. Typically, each fund has its own theme. Now, for this example over here, it's the Principal Asia Pacific Dynamic Income Fund, which is available in Touch and Go Invest. You just go to your Touch and Go app, you tap on Go Invest, and then you'll be able to see a lot of different types of funds. And one of it is this one over here. And the fund objective, they actually state it quite clearly, provide regular income by investing primarily in the Asia Pacific ex-Japan region and at the same time aims to achieve capital appreciation over the medium to long-term period. Now, with this first sentence alone, you already know whether you should go into this fund or not. Now, let's say you want to invest primarily in the US market, then this one is not really for you because they already said that it's mainly investing in the Asia Pacific ex-Japan region. So after you've read the summary and take a look at the fund performance already, you have to look at what are the asset allocations. Specifically, where your money goes to when you invest in these type of mutual funds. Because if you invest in ETFs, it's pretty simple, right? ETFs, they just track a particular index. You know that you're pretty much investing in the entire US market or gold or whatsoever. But when it comes to mutual funds, because they have different types of assets within the fund itself, you have to know exactly where your money goes to. Now, in the case of this example over here, which is the Principal Asia Pacific Dynamic Income Fund, they have about 90% of it allocated into foreign equities, yeah, foreign shares, then 7 to 8% in mutual funds, and the remaining 4 to 5% in cash. Then you move on over to their sector allocation. What sort of exposure that you're looking for? Are you looking for things like healthcare? Then in this case, this fund may not be for you. But if you're looking for tech stocks, particularly information technology such as AI, etc., chip technology, right? Then this one may be for you because it is 23 to 24% invested in IT. Then you look at regional allocation. You have to see where does this fund invest their assets into. Mainly into Hong Kong, India, Australia, Taiwan, and South Korea. So really, this is just an example. You have to take a look at Touch and Go itself and the different fund providers to determine what sort of exposure that you want to have. Now, there are typically three types of fees from mutual funds. The first one being sales fee, which is an upfront cost that you have to bear when you start to invest. Then you might have heard of public mutual. They charge up to 5% as their upfront cost. Meaning, if today you were to put in 1,000 ringgit, you will lose 50 ringgit off the bat. Just to begin investing in this particular fund, in the case of public mutual. And then there is the management fee as well as the trustee fee. Now, these two fees are charged annually based on the net asset value of the fund. They are not charged like, oh, let's say the management fee plus trustee fee, they add together is about 2% per year. Doesn't mean that if you invest 1,000 ringgit, every year they deduct 2%. It's not the case. It's based on the fund size itself. Let's say this year, the fund makes a profit. You can see that the size of the fund increases. So 2% on a larger sum, the fees will be slightly higher. But if this year the fund makes a loss, very bad performance, the size of the fund decreases. So 2% of a smaller size, you can see that the fees is slightly lower. Now, every single prospectus for a mutual fund will specify these three things: sales charge, management fee, and trustee fee. These are the most important fees that you got to take note of. And 1.8 and to 1.86%, if you add these two up together, is considered a bit on the high range in the industry. Okay, but this is typically for aggressive funds. So for aggressive funds, you typically expect about 1.8 to 1.9% annual management fees. But in the case of, let's say, Versa, they do not charge any sales fee. They do have the management fee and they do have the trustee fee. But unlike public mutual, which charges you 5% off the bat, Versa does not charge this sales fee. And within Versa itself, there are a lot of different types of products. Okay, Versa Invest, you can choose whether you want exposure to Singapore markets or the global market or even the US market, right? And right now, they are also running a promotion, allowing you to earn an additional 1% per annum if you activate their auto debit feature. Okay, so at your homepage, you tap on manage, then you select auto debit. Then if you cash in like a certain amount, the requirement I think is like at least 200 ringgit per month. Yeah, 200 ringgit per month. Then you will receive a 1% per annum bonus in your balances on Versa Cash or Versa Cash. Right? So it's a bit confusing over here. To utilize this promotion, you actually have to auto debit into these funds. Then you get plus 1% bonus in these funds. Now, bear in mind, each of these funds, although they may seem similar, Versa Growth and Versa Growth, you may think that both of them are similar funds. They're actually quite different. So at the end of the day, you have to read the prospectus and see what sort of exposure that you want. And the next one, this one is Touch and Go Invest. Now, I quite like Touch and Go Invest because they provide a lot of different types of funds. And they really tell you what sort of exposure that they have. Now, let's say this aggressive fund over here, which is the Principal Global Titans Fund, so far has about a 16% return since the 31st of January. They have their top holdings in Apple, Microsoft, Amazon, Nestle, and more. So if you click inside the fund info and you read their prospectus, you realize that the majority of fund is invested into US equities. So if you want exposure into US markets, then this fund may be for you. Or let's say you're a bit more moderate investor, okay? You want to invest in Samsung Electronics, right? Inari Emerton, Tenaga National, a bit of Malaysian markets in the mix as well. And you prioritize Sharia compliance. And then you have to probably select a more moderate risk fund, such as this example over here. So the only difference between Touch and Go Invest, apart from the funds itself and the exposure, is Touch and Go, they do charge a sales fee. They're up to 1.5% upon investing, meaning that you invest 1,000 ringgit today, you will lose 15 ringgit. And then there's also the annual management fee, which is pretty standard across the industry, about 1.8 to 1.9%, especially for aggressive fund stuff. And yeah, hopefully that gives you guys a good idea on how you can start investing in mutual funds and what sort of fees are involved. What is the definition of short, medium, and long-term investment? Now, the first thing when it comes to building a portfolio, okay, the fundamental thing when it comes to building a portfolio is you have to determine what you are investing for. And with this goal, you can determine your time frame, whether it's short, medium, or long term. I'll give you an example. Let's say you are planning to save up for a down payment for a car within the next 2 to 3 years, right? So you have your goal already and you have your time horizon. And 2 to 3 years is considered pretty short. And with this knowledge, you know that you cannot afford to take too much risk. You cannot go all in on assets like, say, Bitcoin or maybe even the US market. Because why? If let's say Bitcoin does something like this, if it does something like this in 2024, it goes up about 50 or even 100%, then it's good news, right? But if it does something like maybe the bear market in 2022, right? Then your 10,000 ringgit or your 20,000 ringgit saved across the span of the 2 to 3 years is going to lose a lot of value. Yeah, because you wouldn't want to end up with like only 2 or 3,000 ringgit or lesser. Right? So if you have like a short-term time horizon, then your risk profile should be lower. Okay, but if you have a longer time horizon, let's say you're planning to save or invest for retirement, then in that case, you can afford to take much more risk. If there is no active transaction for that year, do they still charge for management and trustee fees for the year? Ah, yes, they do still charge, because it entirely depends on the fund size. Yeah, it doesn't depend on whether you invest or not. This annual trustee and management fee is based on the net asset value of the. Okay, but then again, if the fund makes a loss, the fund size is smaller, so 2% on a smaller fund size, like what I said just now, it's lesser fees. If I'm interested in investing in short-term funds, probably going to be using it at the end of this year. Which platform and types of fund would you recommend? I know it's not going to be much, but it's something, I guess. Well, so for short term, let's say short term in the next 1 to 3 years. Okay, in this case, there are so many options for you to choose from. And at the Futurist, we've talked about so many different products, okay? And it changes from time to time because each platform, they typically run promotions. Like GX Bank, right? Just this month only, yeah, from I think April 19th all the way until 11th of May, they are running a 5% per annum promo. But so far, the campaign has been fully utilized already. So right now, they are reverting it back to 3% per annum. So these are the few options that you can choose from. Yeah? Maybe you want to put it in GX Bank, you get 3% per annum, or perhaps Touch and Go Plus, 3.49%, Versa Cash, 3.77%. Then there's also Rise, 3.8%, right? And the most well-known one is ASB and ASM. They pay quite high dividends, 4 to 6%, but the payout is yearly. So all of the apps that I mentioned just now, the payout is either monthly, yeah. In the case of Rise, it's monthly. They pay you out at the end of each month. But for Versa, Touch and Go, and GX Bank, they pay you out every day, yeah, at the 3% per annum. Shout out to all our members, our gatherer members. Thank you so much for your support. Andrew, Wendy, Edward, Alex, CC, Is, Urshad, Caveman Balls, Calvin, Tommy, Jinkang, Adrian, JS, Wenyan, Dean, Duhan, Sufi, Faris, Alan, Jackson, Ryzan, Hudson, G, Jeffrey, Lawrence, Lukman, Will, Jack, YC, Arif, Haziq, and Jindan, as well as all of our learner members. All right, guys. Bye. Stay safe.